wanted to take a look at Exxon Mobile Stock, XOM, the ticker symbol. As the price of oil goes, so does the stock price for Exxon Mobil. So what's going to happen in the future? Now, my take on the economy is simply this, and I start everything from the economy. The Federal Reserve probably behind the curve, but they certainly don't have the ability to make moves just yet. Inflation is slowly moving closer to their 2% target rate. Unemployment is starting to slowly increase. What I believe is that we will see sort of a continued slow move in both inflation and then unemployment, and then eventually a bigger move. What does that mean for, say, Exxon Mobil? Given that supply with the economy contracting somewhat, supply in oil will increase, and this will affect the overall price of Exxon Mobil. Now, I have a few charts when you kind of look at the overlay between Exxon Mobile stock, XOM, versus, say, USO stock, which is the ETF for oil, or XLE, the energy sector, or some of the other sort of industrial ETFs. They're carbon copies of each other. So if you're looking to get involved in oil, the move in oil, my take on this is real simple, that we're probably going to see the price of oil drop. Probably we're above $80 right now, but I could easily see targeting low 70s into the 60s over the course of the, say, next 3, 6, 9 months as the economy starts to contract. That will affect Exxon Mobil. They're carbon copies, the price of oil and Exxon Mobil. They don't really have much in the way of value adding with extraction of oil, processing, and selling. Let's jump in and I'll break down some of the charts I'm looking at for Exxon Mobil. Here's a look at Exxon Mobile stock, daily chart for XOM stock. As I mentioned in the intro, as an economist, that's where I base all of my analysis. And I believe that the rate of growth of the economy is moderating and that it will likely move lower given some of the information we have. Personal incomes have been flatlined below median. We're at full employment and starting to see a contraction in full employment down to normalized levels for unemployment. Unemployment just, of course, crossed the 4% level. 4.053% is where we are, so 4.1 if you want to call it, if you want to round up. Given that, the rate of growth of the economy will moderate, and because of that, a lot of valuation that we're starting to see in some of these stocks is overpriced. More than likely, I could see ExxonMobil charging below 100 over the course of the next 3 to 6 months, given the economy. Here's a look at USO and XLE. XLE being the ETF for the energy sector, USO being the ETF for oil. And as you can see, they're basically carbon copies of ExxonMobil itself. So if we do see this contraction in the economy, the lowering of the rate of growth, more unemployment to normal levels, say 4.5%, this will mean too much supply. Price for oil drops, ExxonMobil follows suit. Now, of course, we have all the activity that's going on with the war in Ukraine. OPEC themselves, notorious cheaters when it comes to production. What will happen is as their supply, individual countries within OPEC, as supply starts to build up, they actually continue to produce more because they're trying to get that marginal profit, which means more supply, which means lower price as demand declines. So that's kind of the basic economics behind the price of oil and supply or demand given an economic environment. Now, this is a mess. This is the Select Spider XLE stock plus the various entities within there. Now, XLE stock and ExxonMobil is just slightly below all this. This is a mess. APA is the big loser, And TRGP is the big winner on this. TRGP over the course of the period of about a year, they're up about 55%. APA is down about 35%. And I want to try and kind of break out some of these later on, but I just want to kind of show you that. Let's break out some of the numbers on Exxon Mobil. Total equity about $213 billion, with assets at $377, cash $33, and liabilities at $164. Market capitalization of about $157 billion given the current price, and then enterprise value taking market cap less cash plus liabilities $288. Price to earnings, price to share to sales, price to cash flow, and price to book. Here's a breakdown of this. So ExxonMobil's price to earnings is starting to move a bit higher relative to where they normally are. Basically, it's kind of overpriced. Keep in mind, there's not much in the way of value added, but all the stocks in the stock market, broadly speaking, are overpriced in my kind of consideration. You get NVIDIA, of course, which has been tearing it up because of the AI craze. Broadly speaking, the stock market itself doesn't really have much breadth. The Dow itself has been kind of flatlined over the past few days to weeks, whereas NASDAQ and S&P has really been charging forward. And it's really just a couple stocks that are pulling us out. And I'm starting to wonder, okay, what happens to NVIDIA, which is overpriced given the information we have today? What if they miss? The stock market itself would wobble hard, if not fall. And it's because of everybody starting to take profits, reality check, plus the fact that the stock market itself is a little overpriced considering the economy we're moving into. So as you can see with ExxonMobil price to earnings moving higher, probably going to be moving backwards, downward. Price to sales, they keep a fairly solid, consistent number, but again at 1.4, probably about 0.2 too high. Price to free cash flow, again, you can see that they're kind of continually moving higher. Price to book, they've kind of flatlined here, and this is a fairly consistent number. Return on assets, return on equity, and return on invested capital. Breaking these out, return on assets 8.78%, and this continues to decline, meaning that with their assets, they're not able to bring in more revenue and earnings based on current asset levels. Return on equity, of course, same thing. They're seeing a decline there in invested capital. They're actually seeing an increase here, which could give them the sort of go ahead to move forward and invest more capital. But I believe we're going to see an economy that contracts. And a lot of times their invested capital does take time to pull things into fruition. Pretty flat line when it comes to revenue on a quarterly basis. Comparing Q1 this year to Q1 last year, small miss. But I want to know 2024, 2025, $358.3 billion for this year, $354.1 for 2025. They miss. This is what I'm looking at. Analyst expectations, I think, are a little too high given the economy we're about to enter. And that's really kind of the foundation of my analysis for what I've been looking at over the past few weeks. Looking at net margins, 10.1%, that's about average for the entire S&P 500. They're just slightly below, which I think currently it's about 10.75% for net margins. Now this is a product, it's a commodity product, oil, of course, one of the biggest commodities out there. No real value added, yet they're able to come in with a modest net margins that's in line with the entire S&P 500. So that's pretty respectable that they're able to produce a commodity product and bring in a fairly solid net margins. Earnings per share, comparing Q1 2023 to Q1 2024, you can see there's a small decline there. What are we expected to see in 2024 and 2025? 926 and 992, they will miss this as well. It's just the economy moving forward. It has nothing to do with what ExxonMobil themselves can do. necessarily accept or notwithstanding the fact that we're entering an economic environment where unemployment rate is probably going to slowly, incrementally move higher, then all of a sudden take off. Interest rates will follow suit because inflation is slowly getting closer to that 2% that the Federal Reserve is targeting, then eventually will really start to accelerate. Those, both inflation and employment, are lagging indicators. So when you start to lose, say, 0.4, 0.5, 0.7% in unemployment, when you start to see unemployment move upward by those kinds of numbers, when we get closer to 5%, demand drops, supply increases, price drops. Because of that, projected earnings per share for Exxon Mobile, a miss. Now, Treasury yield is at 4.3%. Now, here's what's really kind of sort of, when you look at it, you're like, okay, great. We're going to see an economy that's going to be contracting. Given the future earnings per share at $9.26 for Exxon Mobil, their yield is 8%, which is solid over top of their comparative Treasury yield. ExxonMobil is an excellent, say, dividend stock in that regard because they continually pay consistent dividends, and their price to earnings levels with a yield of 8% is awesome. But price will fall because of the price of too much supply. Oil prices drop. Probably going to see a good solid $10 drop in oil over the course of the next 3, 6, 9 months. Then you'll see price stabilize, and that's probably a good time, especially for those who are looking to get dividends, to buy into ExxonMobil. Now, the yield may, with dropping revenue and dropping earnings per share, yield may not change too terribly much because price will go down lower. So even though you are going to see earnings per share dropping because of the price of oil, the stock price will fall as well. Should ExxonMobil start yielding, say, 10 to 12%, given future earnings per share, as someone who's looking for, say, income in the form of dividends, you'd be able to buy a lot of shares of ExxonMobil at a low price with continued yield. That's one of the things I really like about ExxonMobil. ExxonMobil is one of those stocks you kind of have to pay attention to simply because it's such a big barometer over the overall economy. But individual investors who love that dividend yield are going to buy the bottoms as much as they can. So there is a limitation to how much ExxonMobil will fall. But it all really is driven by supply and demand. Again, I look at everything starting with the economy. This economy is going to contract more. We're starting to see the signs. Unemployment moves higher. Interest rates eventually will fall. Probably at first, slowly. Then, kind of a snowball. Make sure to hit that like and follow button. We'll see you in the next video.